Hi traders, how are you doing? Thanks for tuning in. I'm Dale from theforexguy.com, specializing in swing trading, breakout trading, using price action strategies. Today, I'm going to show you a live trade that I'm going to take and just go through a bit of analysis on why I'm going to take the trade and what my expectations are with it. I'm using real money here, so this is we're not joking around. This is the real deal. Now, if you follow my posts on the site, you probably already know what my intentions are here, but you would have seen I posted about the Aussie yen and the euro pound. So we've got this double inside day set up here. A lot of traders think that this is a signal you just buy and sell these, but it's not. It's more like a framework for a breakout. So it's a catalyst for something to happen. So when you see these double inside days, it's like a, alert coming up, pay attention here, something's going to happen. So we've got this single inside day, which is just a candle that sits within the previous candle range like here. They're a little bit more common and low quality. You've got to really know your structure analysis and your price action analysis to be able to trade single inside day breakouts effectively. But double inside days, which is an inside day within an inside day, so it's basically inside days stacking together, are a much more powerful signal, and they're a much more potent breakout catalyst. So, and even sometimes you can get three inside days in a row. So you'd have one, two, three inside days, and that's an even more like, hey, pay attention here, something's going to really explode in a minute. So we've got this double inside day here. So as I said, they're much rarer than the single inside day, and much more high quality and worth paying attention to. So this was my plan. So we've got to step back and do a little bit of market analysis here to just sort of tie the context of how this setup has formed, within the overall market structure here. So we've had quite a strong uptrend with the euro pound, and technically we are still in an uptrend because, the definition of an uptrend, all of you traders that send me emails, how do I find the trend? Well, it's simple. A trending footprint is basically higher highs and higher lows, or for a bearish footprint, you get lower highs and lower lows. So the swinging motion of this market is basically going from higher highs and higher lows, and you can see that the market has created this trend line structure here, which is basically being respected as like a linear support. So the market's pulling back after making these highs, and these retracements are basically terminating at this trend line support here, and this trend line is like containing prices from going lower, right? Now, we had this last sort of peak into higher highs, and it's almost like some people would call this like a climax move where the trend just gives it one last burst and then it sort of dies out. The reason I think that we may see the end of the trend here is because of this level here. Now, it doesn't make much sense on the chart right now because we can't really see what's going on. We have to switch to the weekly chart and get our top-down analysis happening. So we can see that we've reached sort of a critical weekly level where previously it was very strong resistance, and we can see in history that this market, going back into 2007 and that, we can see that it's acted as a fairly decent level on the weekly chart. I only really go back into history on the weekly level to get sort of like major structure levels like this. I wouldn't do this for tiny little daily swing levels and things like that. We're just looking for major kind of reversal levels or potential reversal levels on the weekly chart, and then seeing what's going on in the bigger picture, where the potential reversal points are. Then we scale back into the daily chart and potentially the 4 hour as well, and to do our analysis which aligns with what's going on in the bigger picture. So we can see we did have this bearish response from the weekly resistance level there. And if you basically look at the weekly chart, how it closed last week, we got this massive bearish candle here. It's got a very thick body to it, very thick bearish body. We haven't really seen anything like that, for a few weeks. And also look at the nature of this trend from the weekly perspective. We just had this massive rally from its like weekly lows, and it's just basically made this straight line power move, from bottom to top here. So that sort of, in your mind, you'll think, well, it's almost time for a correction. I mean, these straight line moves can't power on forever, right? Now, getting to the trade setup. I know I do a lot of talking, but just thinking out loud here and just letting my thought process when I go through the charts and sort of work my way through these trades. What I'm looking at here is the location of where this double inside day setup has formed. So we've had this major level being tested and we had a very strong bearish response. I'm thinking this is going to be a major reversal point, and it's most likely that we could see a major reversal here. We don't have any major reversal signals that I use yet, but that big bearish signal sitting on the weekly chart, is a bit of a like flashing light saying further bearish price action is quite possible here, because you've got a big fat bearish response off a weekly level. That's usually a catalyst for a big reversal, right? So in my opinion, I think what's happened here is the market's sold off and it's reached another critical decision point. This trend line has been a point in the market where traders are making decisions, right? So we've got all these sellers coming into the trend line, and we've probably still got all these residual buyers hanging around. And so we've got buyers and sellers sort of meeting at this trend line structure, and I guess they've gone into a bit of a heated battle. A lot of money's exchanging, buying and selling is churning all these orders around, and basically that's caused price to stall and create this double inside candle effect. Now, I think that just from what I told you before, that the trend is possibly over and we're going to see continued bearish price action. So what would be a very bearish statement on this chart is if this trend line is busted, if we see price drop below that level and close on the negative side of the trend line. And we've just got this beautiful double inside day set up here right at this critical decision making point. So what my plan is to basically wait for the market to break out of the recent inside day low, and that's basically going to be my breakout trigger. Now, one of the things I was discussing with the War Room members is you just got to watch out for Asia session breakouts, especially with the euro pound, because the euro or the British pound is not something that should be active during the Asia session. And have a look what's happened here. We actually have had an upside breakout probably during the Asia session or maybe closer to the London. But see how deceptive that is? It's the market's come up and now that breakout's fading, and most likely, in my opinion, we're probably going to see the market trickle down and continue that fading, and that bearish momentum is going to come back in and most likely trigger that breakout there. The reason I'm only biased to the short side is, for my reasons I discussed with the bearish price action on the weekly level, but also just looking at that weekly chart, I do not want to be bullish because the bulls have made their move. The trend has basically been in existence for many weeks, and we've got this major weekly resistance level there. I'm not interested in buying upside breakouts because we've got this trouble here. We've got the potential trend exhaustion as well. We're seeing signs of that already. But what's a good opportunity if this market is going to reverse? We're going to potentially get a breakout to the downside, and then we got a lot of potential to move down and hit some high profit targets here. So I'm starting to get a bit of anxiety here because this market might just start to tank soon. So what I'm going to do is set up this trade live in front of you. So I just use my little risk reward measuring tool here. It's a somewhat modified Fibonacci. I get a lot of traders actually asking me about this, so I'll just quickly show you. If you can just see there, that's how you do it. It's just percentages, and then you just label the percentages like that, so you can pause the video and go through that. First, I've got to calculate my lot size. So we've got to put, so we've got 420 points, which is, so I want $1,000 on 420 points, and we need to divide that by the tick value, so 1.418, that should be enough. So we're looking at about 1.7 lots. So we'll get in there, and I want to take a sell stop just under the low there. So trading sell stop, what was it, 1.7? 1.7 stop loss, always placing that. And we've got to add the spread. So I've only got a small spread here, so about 5 pip spread's fine. 79800. 79800. Okay, just gonna place that, and there she goes. Now I'm probably gonna set the target at about 1 to 6. I mean, if this thing's gonna drop, okay, and also check your lot size. When you place that order, two things: make sure you got your, you can see this green line and the red line here, especially the red line. That's your stop loss, obviously. Make sure it's there. Make sure it's in the right spot. If you've messed up and it's quite easy to do. Believe me, I've done it many times. It's quite easy to mistype a number and your stop loss ends up, up here or something. And you can just double click on that, whoops, and modify it, or you can just click and drag actually. And actually, a nice little cool feature is, see, as I move the stop loss, it actually tells you what my risk will be in dollars. You see that? I can't, if I just there like that. So yeah, I'm not going to modify that. That also works with the targets as well, actually. So you can actually verify there that you've got the right dollar risk there, and I can see that basically my calculation was correct. So yeah, make sure your stop loss is there set properly, because that's very important. Your entry's right. Check your lot size, and yeah. So if this setup unfolds the way I expect it to, then I think we're going to get a decent push down, 1 to 6. I mean, I could probably even hold a bit longer than that, but let's face it, the markets have been a little bit flat lately, so I could do with a nice cash injection. Right, so I've been talking for a little while there. I'm going to leave the video, let this trigger, and we'll see what happens, and hopefully I can come back and show you some good news. So I'll see you in the next part of the video. Hey guys, I'm back with a really good outcome on this trade. Very happy with the result. Very nice sell-off out of that double inside day breakout session, but as you can see with my statements below in the history there, I've got 2 euro pound trades open. So what happened there? So what I actually did was I scaled in a very sneaky way to this position and sort of like mitigated my risk a little bit, and I'll just show you how I did that. So remember how I was speaking about that Asia session breakout that was forming, or fake out, I should say, Asia session fake out, a breakout that basically failed. What I've basically done is I've used that as a trade signal in itself, because generally these Asia session breakouts, when they fail, you get good follow through after that. The fake out turns into a sort of like a reversal move. And this one was a fairly aggressive play. So if I think it was this guy here, if I click and drag that onto the chart, that should mark out the trade for me. Yep. Now I'm going to need to drop down to the 4-hour chart where I actually took the trade. And here it is. And I don't think I can zoom in anymore. So because price has moved a fair bit, it's like scaling out there. Now, this is the 4-hour candle that basically encapsulated the Asia session breakout there. And what's basically happened is when the 4-hour candle closed and we're moving into London, we got a small rejection candle on the 4-hour chart, which is actually a sell signal. So we've got two things coming together to build a good case to short. That's the Asia session fake out and the rejection candle itself. And it also qualifies as a good 4-hour swing trade as well, because we've had the market basically come down, retrace back up, and sort of like flatten out here, and this 4-hour rejection candle made a lower high on the 4-hour chart. So the only criticism I would really have for this trade, and why I would say it's a little on the aggressive side, or I was on the aggressive side on this one, is because the range of the candle is just a little small. But my battle station indicator that I made, which has an internal range checker that I programmed. It basically checks all the surrounding candles and compares the range of the signal to the surrounding candles just to filter out those small insignificant um, candlestick patterns. But it passed that. That's why there's that tan line through there. So I pulled the trigger and I went in with a retracement entry. It got filled and the market sold off aggressively that session as well, and basically off it went, and that's the end of that story. And I did that. Go back to the daily chart. I basically did that while still having my double inside day breakout order as well. So what basically I did to mitigate the risk was obviously my stop loss was above the high of the Asia session fake out, which is the 4-hour rejection candle right here. When the market came down and triggered the double inside day breakout, I moved my 4-hour signal or my 4-hour trade stop in line with the double inside day stop loss, which was above the high of this inside day here. So if the market did, for some reason, come back up and basically hit the double inside day stop, the 4-hour trade would its stop would have been hit also, basically around the break even point. So I would have only lost the risk that I had on the double inside day there. So yeah, it basically just took the risk off the table of that 4-hour signal as soon as the double inside day signal occurred. So this was a really unique opportunity to do this like little scale in trick. It's not you're not gonna find these kind of situations all the time, but yeah, it's just with everything just combined perfectly. That Asia session breakout slash into a fake out, double inside day, everything just unfolded, nicely for me to do this. So that actually increased my profits a lot here as well. So what's happened now? I'm sitting here on Monday. The market's just opened, and what do you get at the market open after the weekend? You get gaps. So the market has gapped down, and we already are pretty far away from the mean also. So we're sitting on, lower lows here. And because I scaled in and I got some pretty heavy positions open here, I basically made a lot of money. So combining the two together, you're looking at a little bit over $10,000 here. So that's $10,000 profit. I'm sitting here after that gap. So I have decided to just close the trade after the gap down, because generally after a gap down, what do you get? You get that slingshot back, and I'd probably have to sit through a heavy retracement here. So I've decided to take this money off the table while it was available, put the 10K in my pocket, and what I'm just going to do here now is wait for the retracement to occur, and then I'll just wait for the next sell signal to form, at the next lower high, close to the mean value, and basically give me the next swing trade signal. Because the last thing I want, which is always a risk when you want to hold long term, which is what I like to do, is get some nice profit like this, and then all of a sudden the market just, rallies back up aggressively this week and just takes my stops out. That would really upset me. So I'm taking the money and going to wait for the next sell signal. So that's basically it. That's how I scaled in, and that's my reasons for it. I'm really happy with the outcome of this trade. And yeah, so if you guys are interested in this sort of stuff, trading with these candlestick patterns and breakout catalysts and reading market structure and basically using what you have on the chart to build good cases to trade, or if you're interested in my battle station indicator for MT4 or plugin for MT4, you can come and check out the site, theforexguy.com, and I've got some more videos on there. I've got articles, tutorials, and I've got the information on the battle station indicator and my other MT4 tools as well. You basically stop on by, check it all out, and if you're into this sort of stuff, swing trading and price action, I'm sure you'll find the information very helpful. I've been doing this for about 8 years now and I absolutely love it. So thanks for tuning in. I hope you find this video inspirational, and best of luck on the charts for this week.